Welcome to this video on GAAP Advisors channel. GAAP Advisors reviews Ind AS financial statements on a request basis and on suo motu basis. In the previous video, we discussed the appropriateness of the practice of considering investment in liquid mutual funds as cash equivalent with regard to definition of cash equivalent. This video discusses the classification of the investment in liquid mutual funds, that is a cash equivalent, in balance sheet. A review of Ind AS financial statements takes 16 to 24 hours of an expert level professional. Hence, it is a humble request that if you find this video useful, please contribute your desired amount by scanning the QR code given at the top right hand side. Clause 8 of General Instructions for the preparation and presentation of financial statements of a company required to comply with Ind AS of Division 2 and Division 3 of Schedule 3 to the Companies Act states as follows. For the purpose of this schedule, the terms used herein shall have the same meanings assigned to them in Indian accounting standards. Therefore, if some item is considered as cash equivalent, that item must be aggregated with cash equivalent unless required by Ind AS otherwise. Having read the requirements of Schedule 3 with respect to the aggregation of items in balance sheet, let us understand how a listed company has applied the same. This slide shows the components of cash and cash equivalents disclosed by a listed company in notes to statement of cash flows. The company has regarded investment in liquid mutual funds as cash equivalent. However, the company has aggregated investment in liquid mutual funds with current investments instead of cash and cash equivalents. Paragraph 54 of Ind AS 1 Presentation of Financial Statements states investments accounted for using the equity method as one of the line items in balance sheet. Apart from that, there is no line item on investments in paragraph 54 of Ind AS 1. Thus, the line item of investments is a creation of Schedule 3 to the Companies Act. Schedule 3 does not define investments. Therefore, if the company considered an investment as cash equivalent, the company should have aggregated with cash and cash equivalents. Accordingly, the company has not complied with the requirements of Schedule 3 to the Companies Act 2013. The company has also considered bank overdrafts as cash equivalents. Therefore, one may argue that as per the view expressed above, the company should have aggregated bank overdrafts with cash equivalents. We do not agree with that argument because bank overdraft is a financial liability, whereas cash and cash equivalent is a financial asset. Unless the requirements of offsetting of financial assets and financial liabilities given in paragraph 42 of Ind AS 32 financial instruments presentation are met, bank overdrafts cannot be aggregated with cash equivalents though considered as component of cash equivalents. Paragraph 7 of Ind AS 1 explains which information is said to be obscuring. One of the examples of circumstances that may result material information from being obscured is dissimilar items, transactions, or other events are inappropriately aggregated. In the given case, the company has inappropriately aggregated cash equivalent with investment. Therefore, the company has presented the balance sheet and notes in an obscuring manner. Thank you so much for watching this video. Hope you found this video useful. If you would like to get your financial statements reviewed by GAAP Advisors, you may mail them in PDF in near publishing format to info@gapadvisors.com.